Hello and welcome to another lesson of Forex Made Simple. Thank you for joining me today. Today we're going to be going through what is Forex. Now, this is lesson 1 of our beginner's course. So firstly, thank you for purchasing this video and all this course and trusting us to sort of guide you through your trading journey. Now, during this video, we're going to be going through the fundamental basics of the Forex market, just so we've got a brief understanding of where our profit comes from, what it actually is, and the different categories and what everything looks like. So as we go through the course, we've already got this understanding, and we'll slowly build on that throughout the next few lessons during the beginner's course. As always, if you do have any questions after this video, please feel free to contact us. We're more than happy to help, and if you need any further clarification, again, we're more than happy to do that for you. So we're just going to jump straight in. So firstly, Forex, otherwise known as the Forex exchange market, which is an over-the-counter market for trading currencies based on foreign currencies' current or determined rates. Now, all Forex currencies are traded in pairs such as GBP USD, for example, so the pound and the dollar. Now, you buy the Forex pair if you believe it will go up in price, or sell if you believe it will go down in price. Now, one of the common questions we get is, why are the currency paired, and where does my profit actually come from? As it sounds very simple to buy low, sell high. So the idea is that no currency moves in isolation. That is why Forex trades are paired, such as GBP USD. Now, if one currency decreases, it therefore affects its value to other currencies. So for example, if the GBP or the pound was to get weaker, it will therefore have a knock-on effect to a whole host of other currencies, like the dollar, for example. So that's why there is a lot of pairings throughout. Now, to earn a profit on the Forex market, regardless whether you predict the pair to increase or decrease in value, you earn the interest rate differential between the two currencies. So if you get the prediction right, if you buy and that price was to go up, it just means that you're getting more value for what you initially invested into, and the same for if you were to sell. Now, for this example, we're using just a screenshot of the Plus 500 homepage for their currency trades. You can see we've got the pairings for the euro, just to show you the amount of pairings there really are. So for this example, we've got Euro USD, Euro GBP, Euro AUD, Euro NZD, and so on and so on. Now, this is just an example of how many currencies that there are out there to be traded. So there's a lot of opportunities and a lot of different options to trade. Now, all trading platforms are different. They'll most often be laid out in a similar manner though, however. So you'll often have your list of currencies to choose from. You'll have your change, which is basically just the direction of which the Forex pair has been moving in. So we can see that Euro USD has decreased by 0.66%, so we can see that value is actually dropping. But Euro GBP has gone up by 0.57%, so we know that that value is actually going up. Now, you can see we've got a sell price and a buy price. And if you can notice here, you've got two different prices. So you've got the sell price for Euro USD, which is 1.12989, and then a buy price of 1.12997. So there is a difference in price. Now, what this is called is the spread. So the spread is often set by the broker or the trading platform which you're using, and it is the fee they usually charge for you to execute that trade. Often a spread will be very small, but it's always pays attention to pay attention to the spread, because the bigger the spread, once you enter a trade, the bigger the initial minus will be before it works its way into the direction. But don't let this confuse you. I don't really want to get into the spread as of yet, because we do go into the spreads and how to trade them and how to use them in the next video of the beginner's course. So the price. So again, for this example, we're going to use Euro USD's price as our example. So Euro USD has a buy rate of 1.12997. So this means it will cost $1.12997 to buy €1. Now, prices move every second, and that movement is how you profit. So again, we'll go into the effects of how the prices and which affects what. But for example, for this, it's all pretty much based on the strength of the economy and the key news and everything that's going on around us. So for example, if the euro was getting stronger, you would see that the price would begin to go up. But if the US dollar was getting stronger and the euro getting weaker, you would see the prices going down. So this change is telling us that the US dollar is getting stronger. That's why we're seeing that price reduction. If it was the opposite way and it was USD and then paired with the euro, if the US dollar was getting stronger, you would see that the price would be going up. But if the euro was getting stronger and the US dollar weaker, the price was going down. So if it's going up, it means that these currencies here are moving very strongly in compared to their counterparts. If it's going down, it means the currency further to the right that it's paired with is getting stronger, whilst that's getting weaker in comparison. Now that's always key to remember, but again, we're going to cover this in a lot more detail further within the course, so don't get too hung up on this as of yet. So now we're going to look at the categories. So Forex is split into 3 categories to trade from. So we have major, minor and exotic. Now, major consists of the major countries' currencies such as Euro GBP, so Euro Sterling, GBP USD. It's the major pairs which are often the most volatile and can offer the most profit. So they're often classed as the major because they're often the major economies that there's a lot of foreign investment, a lot of expenditure and very big trading countries, which is why they're a lot more volatile because a lot more people are investing into them. Now you've got the minor, so they consist of less frequently traded currencies such as AUD and ZD, for example. And finally, you've got the exotic. Now, these are the least traded currencies, so such as the USD, SGD. These currencies are not very volatile and often offer the least profit potential. Now, when you first start out, we would recommend you probably look at minor and major because they'll offer the most opportunity, but often they'll offer the most risk. But it just means you've got a lot more to be traded in a quicker time span. As exotic, there's usually a lot more little movements and not a lot of opportunity there for you. Now, we always felt at Forex Made Simple that we wanted to really tell you the positive and negatives of Forex, just so you actually know what you're getting yourself in for. As the one very big misconception of Forex is there's a lot of scammers out there selling the dream of, invest £1,000, you'll earn 5,000 in 3 hours and all this rubbish really, but that's not how it works. Forex isn't a get-rich-quick scheme. It's a source of income which can provide a nice source of income, a secondary passive income, but it takes work to get there and it takes some dedication and discipline to achieve that level. Obviously, some people want very different things. So some people just want it as something to earn a couple £100 or a couple $100 extra or something like that each week just to supplement their income. And some will trade this as a full-time job, as we do at Forex Made Simple, and make a good amount of money from it. But what most people won't see is they'll see the greatness of being able to do that, but they won't see the years of hard work and the mistakes and the things where you're so beaten down. Now, I'm not trying to put you off, but it's the idea that you need to be disciplined, you need to be dedicated to this. It's going to be a craft that you've got to dedicate to. So we ideally want to go over the positives and the negatives. So for the positives, I can't stress this enough that the potential earning capabilities are limitless. You can trade anytime, anywhere, as long as you've got internet connection, that there's money to be made. And again, there's that ease of earning money from anywhere, anytime. You haven't got to go to your job, punch in, punch out. You can do it from the comfort at home or on holiday. As long as you've got a laptop or a phone with internet connection, you can trade, you can earn money. You have the skill that will pay you for the rest of your life. So you haven't got to worry about redundancies. You haven't got to worry about losing your job or not having enough hours to work, because you've got an opportunity where there's always going to be an opportunity to make money with it. The negatives: it will take time to master your craft. I don't really think that's a negative as such, but that's just the truth. It can be demotivating at times. It can get to that level where you've lost a bit of money and it's really sort of doing you down. And obviously you do risk losing money. If you're going to start Forex trading, you are going to lose money, which is the simple fact. The aim is to overall, if you do 10 trades and you lose 3, but you make the other 7, that's what we want. Because obviously the Forex market is very much based on emotion and psychology and investments, emotions and economies and things like this. But the idea is we want to be winning more than we're losing, but you need to be prepared for that. So that's why we always recommend you go through all the videos, you go through as much training as you can before you go onto your live account. You play around with a demo account and you start with a very minimal investment. And as your confidence grows, the bigger your investment grows. Now, the truth is, the bigger the investment, the bigger the profit you will earn every time you trade. But that's the truth and honesty that we think everyone needs to know at Forex Made Simple. As always, I really hope this video has helped. I hope I haven't put you off with the last little video. The honest truth is, Forex is a great thing to do. It's a great secondary income. It's I'm very passionate, and we at Forex Made Simple are very passionate about it, and we believe everyone deserves an opportunity to be able to give themselves that passive income and secondary income and better their lives. And if you're dedicated and think you can do this, I guarantee you, you're in the right place. So as always, I hope this video has helped. If you do have any questions, please feel free to contact us, and thank you for listening.